Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look on the euro currency again. As usual, we're doing a weekend. So last week in the weekly report we had really great discussion on the new driving factors in the market and the shaping on the fundamental background, long-term ground for forex market in particular, for all markets in general. And this week we see the realization of these new driving factors and how they impact on the market. So today we take a look what has happened this week. There are two major events that has led to significant action on the market. So first of all, the impact of the tariff starts to show the result, and you can see that Chinese yuan has dropped drastically in the recent few months. So I have put the chart in the weekly report, and you see that those who talked about the mutual effect of the tariffs as on the Chinese economy, as on the United States, were wrong. And we said, when the story just yet to be started, we said that that will be the tool in the hands of the United States. So it's too big difference between the construction, the system, economy system in the United States and in China. And China is very fragile to this external impact because they have the poor social policy, poor healthcare, pension, retirement. So, and it's a lot of small business stands in China that all works for the United States and is really strongly depend on the export. As soon as the new tariffs imposed, this will hurt, first of all, on these small companies. And we already see in China the big rising of the default and the corporate debt that stands on the balance of the national bank. So this negative impact starts to work against the China, and I think, in my suggestion, so I keep it as it was, that China will be defeated in this struggle and surrender. So the United States will do what they want, and they will put China at the place that they should be. So Donald Trump is not stupid, and he knows what he do, and that program of the tariffs has the particular aims that stands on the domination of the United States and taking the economy advantages that the United States should take. So, and that brings first results. That was about the China. As you can see on the United States economy, you do not have significant impact of the tariffs. Maybe they exist, but they are not as visible in the Chinese economy. That's very important. Second story now, a major one, is between the United States dollar and euro currency balance. So currently, these two economies, in the United States and the European Union, stand in absolutely different situation. United States, we have the good performance, and Fed Reserve right now is taking some advanced steps to prolong this situation for as long as possible. So keep this pace. Also, it has a big reserve of the potential rate cut that they could use in the future. While on the European Union, the recent data was the final straw, last straw, and that has triggered the collapse on the euro. So you can see that the Germany gross domestic product has shown the negative numbers in the quarter-over-quarter results. Inflation shows the slowdown, consumption shows the slowdown, so all of the stuff stands about Germany. And European Central Bank stands in a quite different position because they do not have a lot of room to cut the rate. And now already the quantitative easing talks against appear on the horizon. So it means that the disbalance between the United States economy and the European economy will just increase. And that will have the negative sign on the euro currency, and in the longer term we suggest that should lead to further acceleration to the downside. So everything that we have talked on the last week now you could see in reality what is taking place right now in the markets. And this tendency will continue. So currently we do not see any reasons to change our long-term view. As we started to talk about in the beginning of the year that this will be downside trend here, we still keep our view. So now let's take a look what we could do in the nearest future on the common week in particular. So first of all, take a look that on the daily chart our target has been hit. So as soon as market has dropped below these lows, these stops have been triggered and has led to the acceleration. 127 target is completed of the butterfly. So now we need to take a look at another extensions that we have. First of all, this is XOP that has not been reached yet. This minor pattern, ABC top. XOP stands slightly lower, just a few pips below it. Next one will be 1618 extension of the butterfly. It's 108.88. It should be reached just because you have the acceleration right down to the target. When you see the butterfly with the fast acceleration on the right wing, it means that if even some stop will happen at 107 and if some moderate retracement will happen, after that market should proceed lower to the 1618 extension. Finally, we have the OP of this greater ABC top patterns. OP is 108.60. I'm not sure that we will hit it in the next week because it stands significantly below the daily oversold, but it stands relatively near the market. And overall, this extension stands around the envelope, the yearly pivot support one that stands in 109.34. That's another major area. It's like some kind of the this magnet is working as a magnet because it's a really extended target, yearly pivot. So that will be an area that market will move in the nearest future. Meantime, as you can see that market stands at the oversold, and then this extension of the butterfly, in the beginning of the next week probably will start with some pullback. So some retracement here should happen. In the 4-hour time frame chart, we could specify the levels which retracement could reach. So the first level that we could keep an eye on is 110.40, approximately. First 33 fib level, it also agrees with the previous lows, so market could retest them. Next one is a confluence, 1072, 1086. So the next resistance market could reach. So the next week, if you're a scalp trader, you trade on the short-term charts, you could drop your time frame on the 15-minute, 30-minute, watch for bullish reversal pattern, so maybe some hand and shoulders, maybe something will be formed here. In this case, you could try to take the scalp long position with a possible pullback. Other traders could trade on the daily and try to take the position to the downside. We need to keep an eye on the possible bearish continuation patterns. For example, if market will form here regardless triple to sell, some ABCD retracement, that will be just perfect. We will keep an eye on these patterns next week. Also take a look at our ABCD target that we have specified on the Friday as well. It's OP has been hit as well. Since we have here is also acceleration rate to the OP, it means that market could continue to the XOP. XOP stands actually, guys, it agrees with the other targets on the daily chart. So 108.43. So will be XOP, and it stands very close to this OP target. So it's in general you can see very near standing targets. So it's like some kind of the stay away. So as you can see, XOP first is 161 of the butterfly, OP larger than XOP, so very close. Each 40 pips we have another target. That's approximately our suggestion on the euro in the coming weeks. So first it's bounce, either to the first fib level or the confluence, waiting for a bearish continuation. Next step is taking short position and moving to the extensions that we have below the market.